Thank you very much, Kathy, and good evening. South Africa's economy recorded its fourth consecutive quarter of growth, expanding by 1.2% between April and June this year. But despite 4 consecutive quarters of that growth, the economy is still 1.4% smaller than what it was before the COVID-19 pandemic. Joining us to talk more about how we dissect these numbers is Razia Khan, the Chief Economist and Head of Research at Standard Chartered in London. Thank you very much for joining us. Your initial take on the second quarter performance, many economists had pegged and forecast a 0.7% growth for the second quarter. This is much better than what they expected.
That's certainly the case. I think on the one hand, we know that the South African economy had seen its deepest contraction in the second quarter of 2020, so there was going to be a pronounced base effect. But everyone in South Africa, as you know, tends to focus on the quarter-on-quarter data, this time being presented by Stats South Africa in what we call a non-annualized way. That is, we find it much easier to measure compared to what the economy was doing in Q1. How much more did it grow in Q2? And it's that measure in particular that took everyone by surprise. So that 1.2% quarter-on-quarter print being significantly higher than many economists' estimates. And as much as we know that the South African economy still has great issues to contend with, we've yet to get the third quarter GDP, when we know that will be dragged down almost certainly by the impact of the unrest that had been seen in South Africa. Still, for today, an unexpected positive surprise.
Razia, we'll get to the third quarter predictions with regards to that particular unrest. But let's look at Stats SA's sectoral breakdown, which showed that South Africa's economic recovery from the pandemic has remained uneven. You know, looking at other emerging market peers, are we alone when it comes to, this particular slow growth and uneven growth that we've heard of many times?
Not necessarily, and I think the key looking at that breakdown of the GDP data is to understand that a lot of the positive surprise in the second quarter, a lot of the recovery in economic momentum was really created elsewhere. It was partly made in China because of the strong performance that we saw still from mining, continuing on from a very robust performance in earlier quarters compared to the trends that we typically see in South Africa. We know that net exports were a very significant contributor to overall GDP, growing 4% quarter-on-quarter and helping to lift that GDP print by a full 0.9 percentage points. But that's really around the demand that we're seeing in the rest of the world. Now, while it is the case that other economies have seen a restoration of growth, where we've seen faster vaccination progress, we've seen the reopening of economies, not without risks necessarily, but the fact remains that this is an uneven picture. The finance sector, for example, a sector where we've gotten pretty used to strong growth in South Africa, had a reasonably poor showing in the second quarter. And if we were to break it down further, even looking at the evidence on household consumption expenditure, there is evidence to suggest that wealthier households are seeing more of a recovery. That's where the demand for durable goods seems to be coming from. And at the other end of the income scale, the big concern is actually income inequality may have been exacerbated by the crisis. We are seeing a less healthy picture, and that doesn't provide a particularly sound base for future growth.
Razia, National Treasury has estimated that the July riots could shave out as much as 0.9 percentage points from this year's economic growth figure. This does not bode well, as you've said, for the third quarter, which we expect to come in at a much, much worse rate than the first and the second quarter.
This is the case. case. I think if we're looking purely in quarter-on-quarter terms, that is measuring what we see in Q3 versus the 3 months that preceded it, we know that the impact of the unrest could very well drive negative growth in South Africa. And to put this in context, what should that mean for the ordinary person? As much as the economy has shown some signs of recovering from the COVID crisis, and yes, that recovery may be made elsewhere, it may be driven by a restoration of robust growth or sufficiently robust growth in China. It's the demand for renewables the world over which lent itself to export price strength from South Africa, and all of this has fed into a better mining performance. But that aside, the very fact that you then have the expectation of a significant enough shock in the third quarter to drive that growth momentum negative again is a considerable setback. As we know from the recent release of the unemployment data in South Africa, unemployment is very much what we economists call a lagging indicator. First, you'll get growth doing whatever it's doing, and you'll expect to see the impact of employment on unemployment after some time. But the big uncertainty around the unrest weathered by the South African economy in the third quarter is, what is its lasting impact going to be? Are we going to see the permanent loss of some capacity in the economy, what economists would refer to as more permanent scarring? Will it be the case that some businesses just don't reopen, and with those shuttered businesses go the employment opportunities that might otherwise have been seen? We're still collating the evidence on some of those longer-term, more pronounced impacts of the recent unrest. It's really just too early to be able to say for sure. And this is the big threat for the South African economy. Let's not forget that even before COVID, we had seen successive years of GDP growth that just wasn't meaningful enough. In per capita terms, what was actually happening is that the people of South Africa were worse off because the population was growing that much faster than the economy. And the question that needs to be asked now, there really isn't any room for complacency. Yes, Q2 surprised positively, but all of us should be asking, so what? The real question is what is being done to try to solidify a more robust recovery going forward. And that, of course, is going to rest on a number of factors, but not least the pace of structural reform that we do see in South Africa.
Razia, there goes that a word again, that term structural reform, and it brings me to my final question as to what government is to do this time around, because we still have the pandemic with us and load shedding, which is another threat to the economy. We haven't had load shedding in a while, but it is still a threat nonetheless. What should government be doing right now? And if you can just add in there, what exactly do you think will be the reaction of ratings agencies who are looking at us quite closely in terms of such performance, looking at the second quarter GDP numbers?
So maybe if I take the ratings agency question first, and we know that despite the difficulties, the challenges that the South African economy has encountered, actually the revenue performance hasn't been all that bad. There was recently a rebasing of GDP. This is a regular occurrence, but it does suggest that the debt metrics of South Africa are not really as worrying as previously thought. So we think on that basis, there is good reason for South Africa to see some degree of stability in its ratings. The much more important question, though, is what about the real issues on the ground? Nobody can be complacent. No one can be satisfied with this level of economic growth, given the challenges that South Africa continues to face. So what should the policy priorities be? First of all, on the issue of unequal growth, if there's one takeaway from the unrest that was seen in July, it's that we shouldn't take this for granted. We know that in South Africa, inequality has been a feature of the economy for a long, long time, but no one should be thinking that there is no role for policy in trying to amend that. To the extent that we see a multi-speed recovery emerging with higher income households that much better off than low income households. Anything that can be done as a safeguard, and this is where the reintroduction of COVID social relief grants will be important, the discussion around whether it's even going to be feasible to have a basic income grant, this becomes all the more pressing. It's more of a priority when you understand properly the risks posed to South Africa's outlook by the still high degree of inequality. What else can South Africa be doing? This is an economy where growth just hasn't happened in a meaningful way for the longest time. And if there's any clear takeaway from that, it's that much more should be done to foster a growth-friendly environment at the same time. Now, the two are not mutually exclusive. There's a lot that can be done in tackling inequality, but most of all, create better prospects for growth. Drive an environment where the private sector, where private sector investment is able to play a more meaningful role in driving future growth. And we could spend a long time on some of the micro detail of the reforms that might help with the better growth outlook. No doubt the South African government is already well aware of these. What we need to see is much faster implementation of the proposed growth-friendly reforms.
Razia Khan, the Chief Economist at Standard Chartered, thank you very, very much for your time and analysis there. That is quite sobering analysis from London there at Standard Chartered at Razia Khan's apartment. Well.